Good morning, good people. It's your man, Investing with Cam. It's been a couple of weeks since I've posted or made any videos, and so I just want to come on here and give you guys an update on how my growing my $1,500 account by not investing any of my 9 to 5 money into my brokerage account, and the way that I'm growing my account is by taking the options credits that I receive and buying more stock. And so that's the way that I'm going to grow my brokerage account without having to invest any of my 9 to 5 money. And so, if you guys remember from my last video, TSSI was trading roughly about $12. It had just had earnings, and the earnings was better than expected, but not as good. And so the stock actually dropped at that particular day like 24%. So it went from around, I would say, about $17 all the way down to below $12 actually. But as we can see, even though this is early morning, TSSI is trading at $12.39. And so this is what I've done. I'm going to go down here and you can see here on my screen where it says options. And so I sold one options contract because I have 100 shares of TSSI, and I sold this contract. So it was basically a 2-week contract because, like I said, the stock price had dropped so much on TSSI that it was very difficult to try and get any premium out of it. And when I say difficult, because my average cost is $13.27. So I don't want to sell any call contracts that are below $13 as far as my strike price, because if even at $13, based off of the options credit that I've received previously, even if, let's say, TSSI come this up and coming Friday is at $13 or more, and I have to sell my 100 shares, in which $13 is less than my average cost, but based off of the premium that I had received from other options that I had sold, I'm still up on TSSI. I'm hoping that it doesn't go above $13 because TSSI is one of those companies that I truly believe in the long run is going to continue to do well, and the stock price is just going to continue to go up over time. And so I just want to hold it. Those 100 shares, I mean, TSSI goes up to $100. I mean, I'm up a lot of money at that point. But not only that, the options credit goes up as the stock price increases as well, meaning that I can get more options credit. But if not, I do have another plan that I've set up, and I'll let you guys know which stock that is. That if I have to sell, let's say, my 100 shares of TSSI, then I'm going to more than likely take that money that I receive and go and reinvest it into another stock. But if TSSI, like I say, stays below $13, I don't mind. I'll just turn around and continue to sell my $13 option contracts and or even higher. So let me just go back here and let's go up to my options here. And this is my TSSI options contract that I have open. It's only one. And so if you see here, if you look here under history, I'm going to click on it. My established credit I received was $24.96. So it was a limit price of 25 cents. And so I basically received $25. And yeah, it's only roughly about $12 or so every for the 2 weeks that I've had this contract open. But like I said, it's still $12 a week or $25 for 2 weeks that I would not have had if I hadn't done it. And so I want to show you guys that because there has been times when selling options with TSSI, I've gotten $50 in credit, $60 in credit for selling calls, but that's when the stock price was continuously going up. And so I believe that it's going to eventually start to go up again because it already has. And so the options premium will also increase along with that as far as the call options that I'm selling with TSSI. So I said that there was something a little different that I was going to be doing here too. So I'm going to select this particular stock here. So this stock is UiPath, okay, in which I'm going to get at least 100 shares of this particular stock as well. It may take me a while with the amount of premium that I'm receiving every week or every 2 weeks, but I will eventually get to that point. And so UiPath engages in the development and provision of a software platform to automate business processes, in which UiPath is in a profitable company. And that's always a plus whenever you're looking at buying stock or selling options on any type of stock. You want to make sure that you're investing in a company that is profitable. So if we look at price to earning ratio, it's at 21, meaning that it's good, so to speak. And once again, UiPath is a profitable company, and hopefully it'll remain that way. And so the options premium that we can receive, or one could receive for selling calls, because that's what I like to do on UiPath, is pretty good considering, because right now the share price is at $11, and I would personally choose the $12 strike price as far as for my call. And by doing so, I would receive pretty much $45 in credit for the week for selling that one contract. And so I'm going to try to build up my position in UiPath. I would like to get 300 shares. I don't have to have any more than that. If I can get more than that, that's even better, which I could, but at least 300 shares, because with 300 shares, I could sell 3 contracts, which would equate to, with this limit price that I have, about $135 per week. And so that would be a nice bit of money to be able to receive in credit, and then turn around and reinvest it back into the market, in which I don't know if you guys noticed, I kind of switched up things. I have TSII here, and I own 7 shares of TSSI. Now, this is an extremely speculative play because this particular ETF has pretty much for the most part gone down in pricing, and it's also leveraged. So and it's on Tesla. So if Tesla goes up, then TSII is going to go up even more than what Tesla did for the day or for the week. And the same difference as if it goes down as far as Tesla, then TSII is going to go down more than what Tesla has. And so that's the problem, or the thing, when you're dealing with leveraged ETFs, because they'll go up more and they'll also go down more than the particular stock that the ETF is based upon. But I chose TSII because the dividend yield is roughly about 55%, or distribution yield. And I say that because I'm only going to try to get to at least, I would say, 30 shares. If I get up to 100, I wouldn't go any more than 100 shares. But at 30 shares, in this particular ETF as well, pays out weekly as far as its distribution. And so if I can get 30 shares based off of the dividend calculator and some math that I did, in about 15 years, as long as this ETF stays around and nothing crazy happens, off of 30 shares in 15 years, one could be making over $40,000 in distributions every year in 15 years. If you have 100 shares, you could speed that process up. And like I said, I sat down and did the math myself and not just depended on the dividend calculator. And it was pretty accurate as far as those numbers. And so that's just something I want to tell you guys about. It's not something that I'm recommending you to do. But 30 shares, let's say at $20, it's $600 invested in this and no more. And then I could just sit back and let the distributions reinvest. And in possibly 15 years have enough money to supplement whatever other income I may have. I'm going to do it. And also, This particular company, Rex Shares, also has a leveraged ETF on NVIDIA, in which that particular ETF has done extremely well for the most part as far as the actual price of it. It's only been increasing because NVIDIA has been going up in price as well. And so I say that because if Tesla turns around and starts to go back up, this particular ETF price is going to go up as well, even though it's down now. And I feel like now, if you're going to buy it, would be a good time to buy into this particular ETF because the prices are low and it has been slowly creeping back up over time. But that's what my plans are with this particular ETF, is to get about 30 shares and just sit on them and don't do anything with them. Just let that distribution reinvest and let it reinvest for years and years. And before you know it, you have enough money to be able to do other things, and maybe even go from working full-time to part-time, But once again, this ETF could just go under and none of that occurs. But to invest $600 and just sit on it may be a good idea for most of us if we're able to do so. And so that's what my plans are. As you can also see here, I have another stock that I was selling options on, and I had sold put contracts on this particular stock at $4.50. And so I got assigned last Friday, in which I had well, I don't really want to talk about the premium much, but you see here my average cost is $4.21. It's listed under the positions tab. So right now I'm up on this particular stock, and this one right here is also a speculative play. So it's not, and none of this is financial advice, but this is also speculative because it was listed about 4 years ago, and the stock price, as you can see, is down pretty much half of what it was when it first hit the market, so to speak, or when it had its IPO date or what have you. But this particular company here, New Era Energy Digital, is an exploration and production company which engages in selling oil and natural gas products. And this is located in Midland, Texas. And so I truly believe that over time, because they're taking a lot of their money that they are making and reinvesting back into the company in order to build the company up, in which a lot of businesses do that. Some are successful, some may not be. But this, because I only had so much money, I had enough to be able to sell options on this one, and so that's what I did. And so now that I have 100 shares, once the market opens, I'll see, because right now these numbers as far as the bid and ask prices, they're not accurate right now. So once the market opens, these numbers will update, and then I will turn around and sell a call contract and receive some premium, have that contract expire this Friday. If I have to sell my shares, fine. If not, I'll just continue the process and continue to make premium until something else different happens. But yeah, I just wanted to come on here and give you guys a quick update. I'm still doing this. I hadn't backed out of what I said I was going to do, and I actually am up a little bit more than I was the last time. So I just want to let you guys know that, because like I said, I started with 1,500 because of my stock prices increases, and I'm at about 1,900 right now, in which once the market opens, I could be closer to $2,000 as well if the stock prices continue to go up based off of the news right now. Because if you don't keep up with the market, or if you have been keeping up with the market, the news plays a huge factor in the way that the stock market moves. But yeah, I just want to once again update you guys. I hope you guys have a great week, and I hope to talk to you soon. It's your man, Investing with Cam.